Key terms of accounting. Capital. It refers the amount or asset which is invested in the business by businessman or owner of a business. It is shown as capital on the liabilities side of the balance sheet. Capital is equal to assets minus liability. Sales. Sales are total amount of goods which are sold and services are rendered. Revenues. Revenue is the amount earned by a business owner after selling its products or services. Expenses. It is the cost of use of services or products for the purpose of earning revenues. Example, salary, daily wages, rent, etc. Expenditure. Spending money for some benefit, service or return is called expenditure. Example, purchase of goods, machinery and furniture, salary, rent, etc. Expenditure can be capital or revenue expenditure. Revenue expenditure. If the benefit of expenditure is less than a year, then it is called revenue expenditure. Example, commission, legal expenses, insurance, advertisement, printing charges, etc. Capital expenditure. If the benefit of expenditure is more than a year, then it is called capital expenditure. Example, computer equipment, office equipment, land, machinery, etc. Profit. It refers the positive performance of the business and increases the owner's equity. Profit is equal to revenue minus expenses. Gain. A business profit that comes from transactions which are incidental. Example, profit on the sale of fixed assets, winning a court case, etc. Loss. When a business expense is more than its income, then it is called loss. It decreases the owner's equity. Loss is equal to expenses minus revenue. Discount. It is the reduction in the cost price of the goods sold. Broadly, the discount is divided into two types. Trade. The discount which offered by a manufacturer at the list price of a product to the reseller. Cash discount. The deduction allowed by the seller of goods in order to encourage a customer to pay within a specified time. Voucher. It is reliable documentary evidence in support of a transaction. Example, purchase of goods on cash, cash memo or receipt. Goods. It refers to the products in which the business unit is dealing, that is, in terms of which it is buying and selling or producing and selling. Drawings. Drawings are any amount taken out of the business for the owner's own personal use. Purchases. Purchases are the total amount of goods obtained by an enterprise for resale or for use in the production of goods in the normal course of business. Stock. It is the unsold goods in the business. There are two types of stocks. Opening stock. Stock of goods at the beginning of the business is known as opening stock. Closing stock. Stock of goods at the end of the business is known as closing stock. Debtors. Debtors are the person from whom the amounts are due for goods sold or services rendered on credit basis. Creditors. Creditors are the person to whom the amounts are due for goods purchased or services rendered on credit basis.
For more such videos on all subjects, practice questions and a lot more, download iPrep and learn unlimited.